Have you ever asked yourself, where did all my money go? Or you've heard the term tax bracket and felt totally confused? Don't worry, you're not alone. If you're new here, welcome back to the channel. I'm Joe, a licensed certified public accountant with over 10 years experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. Don't forget to subscribe to our YouTube channel and turn on all notifications for more videos. And check out our blog site where we post every Monday, Wednesday, and Friday. Today, I'm breaking down what a tax bracket is, how it affects how much money you pay in taxes, and why being in a higher tax bracket doesn't mean you lose half your money. Stick around. It's simpler than you think. Let's get into it. So, first thing, let's take a look at what is a tax bracket. Simply put, a tax bracket is a range of incomes that get taxed at a specific rate. In the United States, we have what is called a progressive tax system. Now, what does that mean? It means the more money you earn, the higher the rate on just that part of your income. So instead of one flat tax rate for everyone, your income gets split into chunks, and each chunk gets taxed differently. Think of it like this. Imagine your income is a layered cake. Each layer represents a part of your income. The bottom layer gets taxed at a low rate. The next layer gets a little higher, and so on. But only the income in the layer gets taxed at that rate. Let's look at an example using the 2025 federal tax bracket for a single filer. Just remember, this is just an example, so these numbers are made up just for this video. So let's take a look here. Let's say 10% is what you're going to be taxed on up to $11,000. So that range is going to be any if your income comes from 0 to 11,000. And then you'll move into the next bracket, which is going to be 12% on anything that's $11,001 to 44,725. And then you move to the 22% tax bracket, which is any income that's over 44,726 to 95,375. And then so on and so forth. Alrighty, now that we have our tax brackets down, let's take a look at a good example of how this all works having a progressive tax system here in the United States. So here's how it works. Let's say you made $50,000 for the year. Let's break down how this progressive tax bracket works here in the US. So your first $11,000 is going to get taxed at that 10% rate. So that's $1,100. That's the first layer. Remember, we're making a cake, a layered cake. So the second layer is our next 33,725. So that's going to be the high end of our tax bracket, which was the 44,725 minus the lower end of that 12% tax bracket, which was $11,001. So we take the 44,725 and we subtract it from the 11,000. So that's how we got to the 33,000. So that's going to be taxed at 12%, which is going to be $4,047. And now our third layer, which is going to be the remaining $5,275,000. So what we're going to do now is we're going to take our 50,000, which is the amount that we made, and subtract it from the lower end of that 22%, which was 44,726. So that's what's going to be taxed at 22%. And that's roughly about $1,100. So then we add that all up, and that's how we get our total tax of $6,308, which will put us at an effective tax rate of 12.6%, not the 22% is their bracket on the full 50K. So even though part of your income was taxed at 22%, your average tax rate is much lower. You're not paying 22% on the whole 50,000. That's a common myth. And I'm gonna go back just to show you guys really quickly So if we look at our tax bracket, let's look at the first layer. We're going to break this down. Look at the 10% tax rate that we were talking about. So that income ranges from 0 to 11,000. And I'm going to flip back and we take a look at our first layer. We're taking it first, since we're at the higher end, we're going to take that 11,000, which was the highest end of that range, and we're going to times it by 10%. That's how we got to the 1100. I know sometimes going back and forth, you see it a little bit better. Next, we're going to take the high end of that 12% range, which is that 44,700, and subtract it from the lower end of the 12%. And that's how we got the 33,725. And we're going to times that by 12%, which is where the 4,000 comes from. And then last, as you can see, we're going to take what our income was, our 50,000, and we're going to subtract it from the lower end of the 22%, which was 44,726, and that's how we got to 5275. So that's how, or and then that's going to be taxed at 22%. So that's how the progressive tax bracket works. It's a layered cake that is taxed at each individual tax bracket depending on where you are at. One of the biggest misunderstandings is people thinking if I make more money and move into a higher tax bracket, I'll lose money. Nope, that's not how it works. Only the portion of your income that falls into the new bracket gets taxed at the higher rate, not your whole income. So let's go back and let's look at this example. Let's go back to our $50,000 that we were making. Let's say you get a raise from that 50,000 to now you're making $52,000. Only that extra $2,000 is taxed at the higher rate, not the full 52,000. So yes, you're still taking home more money overall. Now, before we move on, let's clear up one more thing. There's a difference between gross income and taxable income. Now, your gross income is everything you earn before taxes, but the IRS doesn't tax you on all of that. You get to subtract things like the standard deduction, certain contributions to retirement accounts, student loan interest, and other deductions or credits depending on your situation. After all those are subtracted, what is left is your taxable income, and that is what fits into your the tax bracket. So your actual tax bill is usually less than you expected if you just multiplied your salary by a tax rate. Okay, so how do tax brackets affect you in the real world? Well, understanding how tax brackets affect you will help you to plan for tax season, avoid overreaction to raises, make smarter financial decisions like contributing to pre tax retirement accounts to lower your tax balance. It also helps reduce stress because when you understand how it works, it's a lot less intimidating. Alrighty, let's recap. Remember, a tax bracket is a range of income that gets taxed at a certain rate. Here in the US, we use a progressive tax system. So different parts of your income are taxed at different rates. Remember that layered cake we talked about earlier. Moving into a higher tax bracket does not mean you pay the rate on the entire income, just a portion of it. Your taxable income, which is after deductions, is what truly matters. Knowing your tax brackets can help you to plan smarter. If this video helped clear things up, give it a thumbs up. Got a question about taxes? Drop it in the comments below. Thank you again for watching, and remember to come back next week where we uncover how to amend your tax return. I'll talk to you guys.